Hey everybody, thanks for tuning in and welcome to my YouTube channel, Living in Tampa, where it's my goal to show you everything you need to know about eating, sleeping, playing, and living in the greater Tampa Bay area. If it's your first time to my channel, do me a favor, hit subscribe, ring the little bell so you'll be notified every time I release a new video. It really does help me out and I really appreciate it. Today, I've got Christine Wilson on the line with me today. Welcome, Christine.
Hello, Victoria. Thank you so much for having me today.
Yes, I'm excited. We've got a great topic today. This is something that's definitely on a lot of people's mind, especially when they're moving here to the Sunshine State. I do get asked a lot about solar panels, and actually a lot of the times I get surprised reactions from people at, that not everyone has solar panels here. But it is getting more and more prevalent. And it's definitely something that, a lot of the things we're going to discuss today, it's things that I wasn't really aware of. So I think it's really great information for people who are thinking about buying or selling a home. And we're going to dive into some of the ins and outs of that and how it can affect you when you're looking at buying or selling a home. Great.
Cool.
So we've got a nice little slideshow presentation that's going to kind of accompany what we're talking about. I'm going to put that up here for us. Let's see, share screen, make sure I do this right. Okay.
Yay.
Can everybody see that, I hope?
Yep.
All right, Christine. So the first and foremost, of course, that's going to be the most important for people that are in particular looking to buy a home that might have solar panels is how that's going to affect their financing. And of course, that's why I brought you in, the financing expert. So if you don't mind kind of delving into that a little bit for us, that would be fantastic.
Yeah, like you said, I think we're all a fan of solar. We just don't know exactly. It's so new and there's so many things that we're still learning about it. And so I think what we're going to learn here is that we just got to ask the right questions. And they affect financing. They're in some instances, they do affect appraised values and they don't. And then in some they don't. So we'll dive into a little bit more details of that. But just keep in mind, everybody, solar panels it's newer. It's not something that's been established. It's not like a pool. A pool gives a home in Florida value, but that's kind of a standard now because it's been around for a long time and there's been a lot of evidence building up to that. This is very different. And so there's just a lot of things that we have to work through on solar. It's just not a yes or no. It's not black or white. A lot of times it's very gray.
Right. So like you said, you've got to ask a lot of questions. So let's delve into how that might affect a buyer, and some of the questions that they might want to ask when they are looking at a home that does have solar panels on it.
Yes. So the biggest thing when you're buying a home with solar panels, or you're taking a listing, if you're a real estate agent taking a listing for solar panels, you have to know the number one question: are they leased or are they owned? That's the number one question, because you can't assume. I think a lot of people assume that they are, when they're on top of the roofs, that they're owned. And people don't realize that there's lots of leasing options to them. So that's number one. And then, is there an existing loan for them? If they do they lease them and there's a loan on them, or are they owned free and clear? That's the other thing. Is there debt tied to this, and how is that debt tied to the real estate? So that's also a super important question to ask, because there can be instances where they're leasing the panels, but the lease is recorded in the deed where it's called a UCC1 is what that's called with title, when the lease is kind of like recorded with the county. That's what that is, like a utilities. I'm not an expert at that, but it's a utilities type of lien. Or does the person have a personal loan? And we see this very often in this scenario where we pull up credit for people and they have their first mortgage and then they have a second mortgage and it's for the solar panels. And I would say 80% of the time they are unaware that they know that there was a loan against it. They know that, but they did not know that they actually recorded it as a second lien against the house. So,
Right.
and it says on their second mortgage or second loan or something like that on the credit report. And so, and a lot of times that loan is going to have to be paid off if we're doing a refi cash out. It could be subordinated, which means keeping it in place as well. But yes, is there a loan from? See, big question.
Is there a loan? Yeah, there's lots of different scenarios and how that can play out. And I think you brought up a really good point with the lien. I actually just ran into a situation a couple of weeks back, even something as simple as having a roof put on a home. Buyers and sellers don't realize that the roofers, when they're doing that, they actually place a lien on the home during that time period when they're doing that. Yep. And so, these liens definitely have to be cleared up whenever a property is transferred to new ownership. And that's something they definitely need to take into consideration regarding these solar panels, is finding out, is there a lien out there, how it's going to affect them and all of that. So what about this number 3 with the loan? Is it going to be paid off or transferred? So in some cases, it can be transferred then to a new buyer, correct?
Correct. If the new buyer is willing to take that on the debt.
Right.
It doesn't always happen, but we have seen it happen a couple of times where the buyer is super excited. And this is where the changes are starting to happen, because now people are excited and they are buying homes that have existing solar on it. Where before people were like, oh, I don't know, there wasn't enough out there. There wasn't a whole bunch of solar out there, but we are seeing more and more of it. And so, and we are seeing some buyers that are willing to take on that debt because they do get a rebate back, or they have an agreement with the power company for a lower monthly bill for electricity or for power. And then really, I don't know if I have this on here, we might cover it later, but are the solar panels for all of the electricity of the house, or is it just for the pool? And that's that's a big one that I probably should have had on here, but definitely.
I think we do have that on the next slide.
I think it's on the appraiser's notes.
Yeah, maybe we'll save that for then. But yeah, I mean, that can be a really large loan too, right? So that could really maybe affect their ability to buy at all if they're needing to take on that additional payment for the solar
panel. I've seen loans between 20 and I've seen them up to 50. So I think it just depends on that.
Yeah. I know the costs are coming down the more, the more technology that is developed, but it's still not something that's, cheap by any means. And it's definitely, most people, I think, are having to do some type of loan to buy them. So, and then I think we already kind of covered the difference between owning and leasing them. And then the key point here being, if you are a buyer, if it is a loan, that you would have to qualify to assume that loan, and you'd still obviously need to qualify for the loan. So that could play into like your debt to income ratios, right?
Yes. Yeah, we'll go over that in just a minute. I think the thing here, that reviewing of the difference between owning and leasing, so often, sometimes people just don't know. So don't assume that they know, because I know it's weird, but people don't always, they think they own them because they might own them, but they still have a debt on it, so they don't own them free and clear. So I think that's where that point was taking us.
Gotcha. Okay. And so then we're going to delve into all the different types of solar panels. And this was a lot of information that I really had no idea when I looked over this. So this was really quite enlightening for me. I hope it'll be helpful for other people to learn about this too. So the first one you've got here is the solar power purchase agreement. Right.
And so the definition of this is, that's what DEF is, by the way. Definition is the developer arranged for the design, the permitting, the financing, and the installation on the homeowner's property at little or no cost. The homeowner does not own the panels. The developer sells the power generated to the homeowner at a fixed rate. and that is typically lower than the utility company's retail rate. So in this case, the appraiser would not include this in the value of the property because it is not owned by the homeowner at all. It is actually owned by the developer or by another company. And so there's no value given to this. And I think that's the thing too. A lot of people are expecting, you know, a dollar for dollar, because solar is a little on the expensive side. It's not 5 or 7,000. It's way more than that. And I think sometimes they're thinking they're going to get that value on the appraisal. And then as far as debt to income ratio goes, payments for the panels are subject to the agreement and may be excluded from DTI if the payment is calculated based only on the generated energy. So, you know, I should have put here in parentheses, it depends. You know, this is one of those things where it just depends whether we have to count the payment against it. We need more information to find out whether we're going to have to count the payment for the lease on it. But we are, that's just going to be, I don't know. I haven't run into this one a lot, to be honest with you. I just know it exists. And I know that we have to ask those questions to find out.
Right. Yeah. I haven't really seen a whole development where the developer has done that personally myself, but it's good to know for future, because I'm sure we're going to see these, you know, as time goes on. But then we'll move on to the solar panel lease that we kind of touched on a little bit, but this is a little more information here.
So again, the homeowner does not own these panels and they pay a monthly lease payment for them. The value, again, because you don't own them, the value is not included in the value of the property.
That makes sense.
The appraiser cannot use that. And so that's why it's so important to know whether or not these are owned or leased at the very beginning, because then if they're not owned by the homeowner, there's no value. You can see that. And then in the debt to income ratio, lease payments are counted against the debt to income ratio unless it provides a specific amount of energy for an agreed upon payment during a given period. That's a lot.
That is a lot.
Again, I would say this, it depends. You know, it depends on the paperwork that we're given. You know, if we had a 2-year history of them getting a specific amount every single month, and we could document that as far as income coming in or the payments that they're making, well, then yes, you know, it just depends on the documentation that the lender is going to be able to get. And then the second bullet point there says includes a production guarantee under which the borrower is compensated on a prorated basis when the energy produced, but the panels is less than the level required by the lease agreement. So this is where you're guaranteed a compensation. Oh. So if you're guaranteed a compensation, then that also might be a reason why we don't have to count that against the debt to income ratio. So these first two, as far as the debt to income ratio, it just depends. We need more information to find out.
Gotcha. Okay. And then the third one is panels financed as personal property.
So the definition on this, so the borrower owns the panels and are purchased with a note or security instrument and are entitled to the power produced by the panels. So I think we see a lot more of this and then the next one. So this is where the value most often is not included in the value of the property because they could be repossessed. Because if they stop making payments on this, the owner of the panels or the company could come back and say, okay, we're taking our panels off, you know, because we didn't get payment for the last 6 months.
Right.
So the debt to income ratio, how this affects payment to the solar company or lender is included in the debt to income ratio.
Okay, so that makes sense. Definitely. And then the last one, I think the best one, right? The solar panels are owned free and clear.
Yep, they're just owned for the homeowner doesn't have a lien on them. They pay cash for the panels or something like that, or they completed their obligation to the lender when they bought it. The appraiser must recognize that the solar panels are there and consider them in the appraiser's opinion of the market value. That doesn't mean you're going to get dollar for dollar. If you paid $50,000 cash for them, you're not getting a $50,000 because it's really going to depend on your market and where you are. and
Right.
and the comparables. And then
Yeah,
in this one, yeah, the debt to income ratio, no payment, therefore it does not affect DTI.
that makes sense.
Mhm.
Okay, so very important to know what type of solar panel you're dealing with. And as you said, a lot of questions you've got to ask and a lot of supporting documentation you're going to need as far as the financing goes.
Yeah.
Okay, so moving on then, this is a good example of what we were just talking about, how it does affect the debt to income ratio and how this could affect your ability to be able to buy the home at all.
Yeah.
So they've got some good examples here of that. And Christine, if you want to go into that a little bit.
Yeah. I mean, this is just basically showing that, if you have somebody, like a lot of times we'll send out a pre-approval letter, it's pre-approved with what it is here and now. But then if we get further information of now they're assuming a $500 payment, that might not be okay. And most of our loans are conventional loans. You can't go over a 50% debt to income ratio. So that's in that middle, that middle section has debt to income ratio on the current loan at 49%. And then all of a sudden they buy a house with solar panels that they're excited about taking on the payment and having solar. That might be something that they really want. But now our debt to income ratio is 52% because now we have a $150 a month payment.
Right.
So, and so that would be ineligible on a conventional. I mean, we could always try to switch it to an FHA loan. That might work if the borrower is willing to do that. Because FHA debt to income ratios are a little bit more flexible and can go up to 56. But you just have to, the sooner we know up front, the sooner we can correct how we're going to, or how we're going to address it, or say, no, you can take on it. And the seller might not be willing to move forward, with that. It might have been an agreement. So the more
Yes.
you know up front will make a smoother closing in the end.
That makes sense. And I think this question was asked in the discussion that I had watched of your presentation where you went into a little more detail than what we're doing today, but I can't recall the answer now. So I think someone had posed the question with this debt to income thing, because you are not paying then an electricity bill for the most part, or a much lower electricity bill. Does that play into it at all? Or is that kind of a moot point?
So, in lending, we look at the last 2 years to determine the next 3 years. That's kind of how lending looks at. So anytime you're talking about like, are we able to use income coming in from the solar panels? Well, we would probably have to look at like a 2-year history of how this income, how stable and regular and reoccurring it is. If it's super regular and reoccurring, and we can take that to the underwriter and say, hey, this is an income that's been coming in for the last 2 years. Here's all the proof. Well, the underwriter is probably going to use it, as long as, it just depends. I would always say this again, when you are dealing with something new like this is not something that's been around. I mean, I'm sure solar has been around for a long time, but the way it affects financing has not been around for a long time. And so just ask. Just don't assume that, oh, I'm sure I'm going to be able to use that income. That never works.
Yeah.
The moment you do that is when, of course, then we can't use it for some
Right.
reason,
Well, that's what they say about assumptions, right? You
Yes.
cannot do that. So yeah, moving on then to something that's also very important. I mean, when you have this big loan that you are considering taking on, or a lease, or whatever the case may be for solar panels, you kind of want to know what you're going to get out of it as far as value goes on a property that you're either owning currently or thinking about owning. So this is the appraisers. I thought this was super interesting and not near as cut and dry as I thought it would be. So yeah, the appraiser.
This is what I did is I sent an email out to my top 3 appraisers, how I came up with this. These are their notes. And I said, hey, can you give me some comments on appraising solar? And so this is a whole bunch of information that came back from me. So this is kind of their words. So again, they reiterated the point, to make sure to know whether the panels are owned outright or if they're being financed.
Right.
And so if they're owned outright, then they should be given value. If owned, then I thought this was interesting. How big is the solar unit? Is it just for the pool or entire unit, entire home? We forget, to ask those kind of questions, right?
Right. And we do see a lot of them that are just for the pool. Those I think are a lot more popular than the whole home unit.
Right.
So
Right.
that is definitely a question you need to find out.
Right. And is it functioning?
Right. Those do break.
I
Uh,
believe I have some on my roof that I have never used.
yeah.
So we bought the home and they were never functioning. So,
Right. Well, and
um,
that in, cases like that too, sometimes it can actually turn into kind of a liability because then when you go to have the roof, replaced, there's an extra cost associated with having those removed and all of that as well.
yes, yes. And I think a part of my bigger presentation that I did where we had insurance that Victoria was alluding to, we had an insurance rep on there and how solar is now affecting insurance, homeowners insurance, and things of that nature. So when all I can say is when you're interested in buying a home or interested in getting solar, I would definitely pick up the phone and call your insurance agent and ask them about the pros and the cons of having it. Because remember, it's going on one of the most expensive things to replace that your homeowner's insurance covers. And
Right.
so you're affecting that somehow, some way. If you don't, if you, and it was so interesting listening to him because I was like, what? I cannot believe it's going to affect it like insurance like that,
Yeah.
So, but
Oh, and insurance is kind of crazy right now
uh,
anyway, at least here in Florida.
in
It's on
Florida,
the news
yes,
like every day. So
yes,
definitely the more knowledge you have, the better.
yeah,
That's a really good point to talk to an insurance agent if you're considering this.
yes.
But back to
Mhm.
the appraiser's notes. So he goes on about the financing there, if they're being financed.
Oh, wait, we missed the contributive value, that second
Oh, right.
arrow there. I think this is a point, the value of solar systems that are owned varies greatly on subdivision, location, total living area of improvement, and age.
Yeah.
I think that's a huge thing. Is it overvalued for the area? Sometimes you get, it's way out in the country and you got solar, but no one else has solar around you, you know?
Right. Yeah. Cause like that was one of the most, memorable things that I had from that presentation is that, a lot of times in real estate, I know you're not really supposed to do this and appraisers don't, but I know a lot of realtors do. When we're putting values on homes, we have like a general, oh, well, a pool is going to add about X amount, depending on the area, of course. But there's a kind of a general amount that you have in mind. And it seems like that's definitely not the case with solar panels, that it's
No.
very, very dependent on all of these factors that you listed here. And you can't just go by, oh, they paid 50,000 for it, so we're going to give them $25,000 value. No, it doesn't work like that at all. There's just so many factors that I think we as real estate agents can't even begin to put a value on that. I think that's really above our pay grade, so to speak. I think that's more of an appraiser kind of thing that we would need to call and get insight into when we are looking at an appraisal value for those panels.
Right. I think there's something else down here, but all right. So the next one, what does this say? If they're being financed, the appraiser should know whether the panels can be repossessed if the loan goes into default. So
Right.
I know we've already talked about this, but this was the notes from the appraiser, and they're even aware. So they'll ask when they go out and when they go out and ask the homeowner when they do their inspection, they will ask, if they're being financed or if they own them free and clear. If
Mm-hmm.
they can be repossessed, then no value can be given in the appraisal. Lease packages, which we already talked about, those were the first two in our other slide there. Lease pack are not included in the valuation per FHA, Fannie Mae, Freddie. Those are conventional loans and VA, and I'm sure USDA as well. All the loans, they're not going to give that any value.
That makes sense. Yeah.
If there are any panels that are being financed and they are not fixed to the real estate out in the backyard, I have a neighbor who has this. He has a huge backyard, and so he just put up solar panels right out in his backyard.
Oh,
Then they should not be given value either.
oh,
Interesting.
that is interesting.
Mhm.
Hmm.
Yeah, maybe
Yeah.
because it's not affixed to the real estate. It's not. I mean, think about it. It's not affixed to it. So if it's way out in the backyard, right? Because you can't give
Yeah.
value to something that's not affixed to the house, right?
Right. Right. Yeah. And here's the main point that we were just making. The most challenging part is finding the comps, right? To
Right.
show the value. So
Right.
because they're just not in every house yet, or even, sometimes a neighborhood, you might only have one house in there that has solar. So there's not a whole lot of comparable properties to help them establish the value.
Right, but it is becoming a little bit more prevalent, but it's still not common enough to always find a good comparable sale. But that is how you would look. You can go out. Sometimes you can go out of your area for things like this. Not too far out, but you can go out. Usually, real estate appraisers like to stay within a 2-mile area, a 2-mile circumference. But you can go out a little bit further as long as it's in the same type of area.
Right.
And so you can go out a little further if you can find it. It's just the problem is Victoria, is it hard to find like comps like that? Like, is it like noted in the MLS for you guys
That's the
to
thing.
find
You're depending on agents and what they're going to put in there, right? And unfortunately, we have a lot of, I hate to say it, maybe, lazy agents that I wish they put more information. I mean, sometimes I can't even get agents to put which schools the property is zoned for, much less if it has solar panels or not. So when you're relying on, other people for inputting this information, a lot of times you're not going to be able to find that.
Yeah, I would imagine that would be the hardest. And then if the real estate agents can't find it, then an appraiser is going to have an even harder time. So if you are trying to use, if you can find some comps for the appraiser before going out, it's your listing, trying to find them comps, because giving them a little bit of an edge, even if it's a little bit outside the area, is very helpful to an appraiser.
Right. Yes. And then here you're talking about
this Fannie Mae 1004, this is the appraisal form. The 1003 is our loan application. The 1004 is the appraiser.
Gotcha.
Is the appraisal form. It has a line item on the grid for energy efficiency, which is the line item adjustment that is typically made for this type of improvement. But just remember, the benefit of solar system is to reduce the cost of power over the long haul. The contributive value today is not the cost to purchase and install. So
right.
I think that's what the appraisers were trying to bring home, was that if you're, like we said before, that if you spend 50 grand on a full house, system, that you're not going to be getting $50,000 back. So, but they can always pay over. Sometimes, I remember about 4 or 5 years ago, we did a loan with solar on it, and the people loved it. And they paid 10 grand over the appraised value because the house wasn't appraising, because they were thinking that the solar panels added all this value to it. And so, but the borrower was willing to pay 10 grand over the appraised value. 5 years ago, that wasn't the norm.
Right.
now it is
on every purchase right now.
Yeah. But 5 years ago, that wasn't really the norm. But to them, 10 grand was worth it. And you can do that. Think about it. I probably paid 10 grand over appraised value because that system probably cost 40 or 50, when they did it. So you're getting it at a discount to have it on there, depending on how old it was. So
yeah, it definitely depends on, the person buying it. Value is in the eye of the beholder, right? So if it's worth it to you, then definitely good call. If not, then you might want to look for a different property. But these are becoming more and more prevalent. And so we definitely wanted to do a little bit of a deep dive into it. I know there was a lot of information there, but I think the main point is to ask a lot of questions, right, Christine?
Yep. Just ask and don't assume anything.
Yeah.
And know that, and let your real estate agent and let your lender know it all, and your insurance company at that.
Yeah.
And make sure that you're having that discussion with your insurance agent, because it definitely affects. I think that they're actually considering having like a different policy, because like an addition, like an add-on to it, because of all the solar panel claims that they're having, so it's interesting. It's definitely affecting the insurance world as well.
Makes sense.
So,
Yeah, absolutely. Well, there you've got it, folks. If you've got any questions about homes with solar panels or financing a property, you can give Christine a call and throw her number up here on the screen for you. If you've got any questions about Tampa or real estate in general, you know you can always reach out to me. When it comes to moving to Tampa, I've got your back. So go ahead and give me a call, send me a text, shoot me an email, whichever method of communication you prefer is fine, and I'm always available. Thank you so much for watching this video. I hope that it was useful for you, and we will see you next time. Thanks,
thank you,
Christine.
Victoria. See you guys.
Bye.